like get so nervous. I don't know why. I talk to you guys all the time, but I get nervous when I'm live on YouTube because people you don't know listening to you. It's a weird thing, I know. Okay, so we are live and recording on YouTube. So again, welcome everyone back. I am going to minimize some of these massive amounts of tabs I have open to too many. Of course, we have to start real quick. We don't typically do this in the mornings, but today we wanted to go over a couple of things. So before I give the floor over to everything and everyone else, I of course have to mention the disclaimer. Please, please, please know that everything we discuss on this is for, it's not legal, financial, or investing information. Ta-da, really, really simple. So I'm gonna hit stop share on this. I am gonna go and start with my couple of minutes, and I'm going to give the floor over to Scott. Today, real quick, we're going to be going over management. So inside of our little group, we've got, I'm incredibly excited about helping people not only pass their funded account challenges, but also about hopefully, let's see if I can pull up the right thing. Maybe I'm going to try this one more time. Hold on. I can't think and talk. There we go. I'm going to stop talking while I find this sheet. There we go. 5 spreadsheets open. So I'm very, very excited about helping people compound their way to 6 figures. I know that it can be done. I have personally done it. I've met a couple of people who have attempted the 7-figure challenge a handful of times. There are only 500 different versions of spreadsheets like this around the planet. This is just one created by Kat. Obviously, genius. It applies so much that information that's specific to brokers, that's specific to everything that you can possibly think of. So for the purpose of really keeping us in a timely manner, right? I'm going to go over real quick what the compounding challenges do. Ideally, this is Hugo's Way, as you guys can see. Let me move this little Zoom bar out of my way. Hugo's Way, one of my favorite brokers. All the links for the brokers I use are in the link tree, in the YouTube, and of course in the groups. So based off of Hugo's Way, based off of US 30, my favorite pair, based off of starting with $1,500 and a 10% risk. Now, granted, we can really increase this quite a bit based off of keeping your leverage, keeping your margin at above 500%, which is kind of the goal. We said, hey, we don't want it to go any lower than that because this is high risk, but not like the highest risk. So with that said, using those pairs, granted, this is a 100% win rate, simply not going to happen. This is your potential ending balance with 100% win rate at the end of 36 trades. That is insane. The idea isn't that you hit this number. It's that you can have room to fail at this and still achieve 6 figures, still achieve $20,000 for the down payment of your house, still achieve $40,000 to help your mother, whatever your next level in life is. Uncle P just said, can you record this? It is recording now. So don't worry, you have that as well. But back to this, let's talk. How do we make this actually happen? For me, everybody on YouTube is pitching another stupid indicator, another silly strategy. Some of them are amazing. Some of them are less than amazing. Some of them are maybe the end all be all. But in my opinion, the only end all be all is your ability to lot accordingly to your leverage and your broker based off of your country and all the things that go into that. And of course, to manage your trades. So that's what we're going to be going over today. I know this is really pie in the sky, but we can even go somewhere like this, AFX, which has a much higher leverage. We'll make this a much smaller starting balance. Okay. 300%.
Hi, Jenny.
Yeah, coming out.
Hey, Jenny, this is Pat. Are you recording this?
I am.
Okay, perfect. I'll let this person know. Thank you.
You are welcome. Sorry, I didn't respond back on Telegram there.
No, you're doing your thing.
All right, awesome. Well, happy Thursday.
Thank you, guys.
Enjoy your day off because I'm up here.
Yeah, I wish it was. All right.
Bye.
Thanks, sis. Bye.
Yes. Okay, so let's go here. $300 starting balance, AAFX, odd JPY. Well, I don't know about y'all, but I'm not in love with that pair. So let's do GBP USD. Auto fills, minimum margin at 500%. We can actually lower this if we wanted to be super aggressive. We're not going to. We can go all the way up to 17%. I wouldn't recommend it. Okay. But let's go a little bit higher than what we did on the indices and go somewhere in between. Let's go 13%. If I could type. Try that one more time. 13%. Ta-da. 13% at the end of 36 trades. Now, granted, this is 100% win ratio. Let's be honest, we're not going to accomplish that. We're simply not. But also notice it's possible is what I'm hoping people come across. So this is one spreadsheet. And of course, last but not least, I do want to show the funded account challenge one, mostly because some people are looking to use other people's money, right? So by all means, granted, this spreadsheet won't let me do 0.25%, so not an option. The minimum I can do is 1%. So this isn't exactly how I would do this in real life, but to kind of give you guys an idea, on a $100,000 funded account, if you're keeping 90% of those profits, you effectively made potentially, you made an awful lot, right? 90% minus taxes and fees, you still cleared more than $70,000 without having to use your own money. That's not a bad way to be. So great spreadsheet, great kind of concept. I'm going to hit stop share here because there's so much to go over, Scott, and I want to give the floor to Scott and then show some settings on simplicity. So that's the first thing. Now I'm going to go to this. Also, I wish I could say it was created by me, but I am not the spreadsheet whisperer. I wish I was. I'm like the girl who plays on them and treats it like a video game because it's cool to me. I do not have the capacity still to this day to make the best of them. I can make the basic ones and that's it. So this is a Monte. This is not sharing. Try that one more time. This is a Monte Carlo simulation for what we're trying to accomplish. Now, what this spreadsheet does that the other one doesn't is it factors in losses, right? So I'm not going to, again, spend a bunch of time on this because we want to go straight over to management and settings and all that good stuff. But if you, for example, start your compounding challenge with something like $300,000, your risk per trade is 10%. That is aggressive. We know that you should not be doing that with your retirement or your 401k. We know that you should not be doing that with your your bigger plans for life. We're saying these are your play money, okay, the money you can afford to lose on a monthly basis, that kind of fun budget, that fat in your budget, depending on how you quantify that, but it's not going to impact your life if you grow it or if you blow it kind of money. So a couple $100, 10%, assuming you averaged a 71% win ratio and you had a 1.5 to 1 win to loss rate, this is approximately how much you have. Now, what this does is it randomly places all of your stops. Please ignore the notes on the side. I probably should have had that cleared. This randomly places all your potential losses because your wins and losses fall in random places in real life trading, right? So watch what this does as it auto populates and auto calculates every time I type stepping in. So this is going to keep changing, maybe 22,000 at the end of 62 trades. So this makes it a lot more practical. Okay. 46,000, kind of give you an idea with all of your wins and losses following randomly. And that's based off of a 71% accuracy. So before I go further into that, I'm going to share really, really quickly. This is what we've done live in class. So right now we're averaging about an 88% win ratio. So we can see that that's what we've done 2022 altogether since 2021. At the beginning of 2021, we've averaged about an 87. We've achieved about this many pips. So let's duplicate some of this average win to loss, this accuracy. Watch what we get. So new share, go back to the Monte Carlo. So we're going to, again, keep it at 10%. We'll lowball it. We'll say 85% accuracy. This was, what was it? 2 to 1. So we'll say 200 to 100. Watch what we see here. And granted, you can't do that on the US 30 trades. You definitely need a higher account balance to put something like that. You need at least $1,500, in my opinion, if you're trading on Hugo's way, to be messing with that. But look at this, based off of those numbers. And that's only after 62 trades. 62 trades. So you don't have to be that good. You don't have to achieve that. We can lowball this. We can say 5%. We can say 80%. We can say whatever. So you guys get the idea. Let's not do the full, 2 to 1. Let's do 1.5 to 1. You're still making an awful lot amount of money. So keep your eye over here. And then I am about done. So give you an idea. That's what your trading account should look like, not including all the, fees. By all means, there's a lot that goes into this. We know there's expenses at the end of the year, blah, blah, blah. But if you did this a couple of times a year and you effectively made your 6 figures, your 7 figures, not a bad way to be. Who thinks that making $18,000 on $1,500 is probably, a pretty cool thing to happen? Notice this is not a high percentage. This is 5% risk. Means you can lose an awful lot of trades without blowing your account. Who would like to achieve something like this kind of compounding? 7%, that's more up my alley, 10% more up my alley. So that's all I'm going to say on this. I wanted to show that because this is why we're going over the ATM today. So today we're going to go over the tool that I use. And actually, I'm not going to go over it. Scott's going to go over it. So to be able to accomplish things like this, I am superhuman. I fall to my the human condition quite often, meaning controlling your emotions and your logical brain to make decisions during trades is the hard part, right? So if that's the hard part, then we need to figure out how to solve for that. So Scott, do you want to share, or do you want me to, because you've got a nice little thing too. What's going to make you most comfortable?
Well, I can share here.
Okay.
Just going to do a quick overview of what ATM is, and then we can talk about specific implementations.
There you go. So he's going to real quick talk about this tool real quick, and then I'm going to come on. I've only sent one of this set of settings to one person. Everyone else has have access to the other set of settings to show how this manages. But this is the management system I'm using to accomplish things like that. So whether you're doing it with this management system or you need to learn this on your own, these are great, great, great information. So I'm going to hit stop share. I will try to check the YouTube and the chat. No promises, but Scott, you're in charge. You're the boss.
Here we go. So first of all, I always try not to be very advertising in the group. I try to avoid that. And I'm doing this because I was specifically asked. So first of all, I came up with ATM because I was trading Pat's original triple arrow system. And I was seeing that moves would happen overnight and it would retrace and knock out my stop. And I had reasonable places that I could have been taking profits along the way. And I wanted to have a way of capturing all of that. So this came out of my trying to trade the triple arrow system, which, as we all know, is a reversal system. We're looking for things to be basing and then moving back up or back down. And I just wanted to have a way to capture that. So therefore this. So what is a trade manager in the first place? So a trade manager babysits your trades for you. And like any good sitter, you tell the sitter what your rules of your house are. The babysitter then enforces your rules while you're doing something else. So trade manager is an unemotional rule following freak. And that's what we want. So ATM specifically will do a few things for you. It is a trading rule exploration tool. We'll show you what that looks like. And so as you develop your rules, this allows you to go back and back test instantly and see what those rules are going to do for you in different market conditions. And it will also enforce those rules for you when you are in trades. So what can it do? It will set your initial stop loss and take profit levels, however you set that up. It'll utilize either a hidden broker stop loss, take profit, or it can do decoy stop loss and take profit, which is useful in a number of different ways. You can utilize ATR for management level calculations, which Jenny and I both highly recommend. If you don't understand what ATR is, we can talk about that. It will lock in profits along the way, and it will also scale out at predetermined levels, which again, you are in control of. So this is all part of your trading rules, whether or not you want to scale out, how much you want to scale out, and scale outs are a way of locking in profits. It'll manage all of your open trades on your trading account or one symbol, your choice. Now, also understand that if you are managing all trades made on a trading account and you have your computer running or you have a VPS up in the sky running ATM for you, if you take a trade on your phone, it's managed. ATM picks it up. It sees the trade come on and it will manage that trade for you once you're in. It'll manage on whatever time frame you choose. It will trail your stop loss with a lot of different ways of doing it. And the stop loss, remember, is a price touch. So if a level is there with the stop loss, if price touches that level, you're out. It'll close your trade using a wide selection of exit methods, which is a candle close. So a candle must close above or below a level in order to get you out using an exit method. You can have both exit methods and stop losses in place. It'll manage trades taken on your brokerage account, even if taken from a mobile device. We talked about that. And it will back test your rules visually at a glance. So what can it do? It will not take trades on its own. You have to manually open every trade. It will not scale into trades. It will not make up its own rules. It will not move the stops wider to give the trade just a little bit more space. It won't freak out when slightly in profit and close because the last 4 trades lost. It won't gloat, get angry, say, I told you so, or are you an idiot? It won't do anything that's not in your rules, period. So ATM is built up out of 2 pieces. There is an expert advisor, and it looks kind of like this. And what you end up with is once trades are on, you'll see the ticket number here. It'll say how much of this trade have you already closed in dollars and cents. How much is locked, which is how much can you lose if price goes down and tags your stop loss. And how much is your floating P&L for each individual trade. So that is unclosed profit or loss. So the expert advisor performs the actual trade management. It'll run the rule files that you create. It can manage the trades on a single chart or on all open trades. It shows all open trades under management in that panel. It allows you to adjust all the management levels while the trade is open. For instance, if you like to take profit at 2 or 3 different levels due to scale outs and that sort of thing, you can have ATM populate those levels at sort of predetermined spaces. But then if you want to move those levels to match price action on their screen to say, I'm expecting this level to get hit, this level to get hit, you can adjust those to match, and then everything is all set for you. So you can manually override the predetermined conditions. You know, let's say you want to just make sure that there is a stop loss and a take profit in place. ATM can put that on for you, and then you can adjust those levels. So it allows you to manually close or scale out of a trade. It will run as a standalone expert advisor and doesn't require the second part of this, which is the settings indicator, to be running. So you can have just ATM expert running on your screen or on your platform, period. And it doesn't even need to be on the same computer you use to open the trade. So second part of this, which is the part, and this is the part that actually does the work. And this is the part where you do the work. So you're going to use the settings indicator to go through and set up your rules. So you create the rules there, and you also tell the ATM expert which rules it's supposed to use. And it provides the visualize feature to back test your rules. And it's standalone and doesn't require the expert to be running anywhere. So you can use it as an exploration tool, period. So there are also some plugins, and we can show you what that looks like. But this is a way of leveraging some of the things that ATM can do, including some of your risk management. And we also have kind of unique licensing. So I developed this licensing technology. So ATM is allowed to run on 2 active brokerage accounts per license. Now that 2 accounts means 2 live and 2 demo accounts. But you don't have to tell me in advance which brokerage accounts you're on. When you log into ATM using your license code, it goes out and looks at what platform you're on and what the account number is, and it logs that. And it will keep on adding accounts until it hits its maximum number. So if you log into, if you filled up your 2 live accounts, for instance, and this is, remember, running simultaneously. So you can have these on 2 separate platforms. If you go to add a third one, what it will do is it will replace the oldest of those account numbers, ones that was used longest to go, and replace it with the new one without having to do anything on the back end. You don't need to email anybody. It just happens. And you also have option of getting the free Cool License Manager, which you can manually go back in and adjust your licensing. Because normally what there is there's a 24-hour period that an account has to be sitting fallow, not logged into, before it can be replaced. That's to keep you from accidentally taking your license off of something that you're using it for. And if the background noise is a little bit too much, I'm sorry. I hear the blender running upstairs. So it has to sit for 24 hours, but if you have the Cool License Manager loaded on, it will, you can automatically kick a license code off, or an account number off rather. So that is the presentation. And
Okay.
we can, I'm sorry, go ahead.
I said, look at you. You're time on task. Go ahead.
Let's pull up a platform here. So this is the settings indicator right down here. So we can bring that up. And this is where you set up your rules. So we have a bunch of different tabs that we can go to. If we want to adjust our stop loss, we can go here to get to our stop loss. Trailing stop is here, take profits, exit method, our file management, and also for risk. So general is stuff that affects everything, so what time frame are we going to be managing on? What are the, if we're using ATR, we can also use points. But if we're using ATR, how many periods are we averaging our ATR on? How are we going to calculate that? And what time frame is our ATR being calculated on? Because we can manage on a 15-minute and have our ATR calculated on 1 hour if we want to. And all of these things affect what happens. Manage all trades, manage current symbol. We can use the bid ask for contacting our trade lines. Let's say we have a level that's sitting here. And if we come down and our bid ask spread, it's going to be the first touch that's going to impact that as a stop loss. And let's say we care more about where actual price is being drawn. Let's see here, move this closer and go to a higher time frame, or a lower time frame rather, so we can start to see our spread. That is still looking, there we go. So we can kind of see that spread here. So we move this up over the top. You notice how we've got our bid and our ask sitting here, but the price is actually being drawn from our lower price. So if we want to manage by just price, it's going to be whatever's drawn on the candle. So if the spread widens, that's not going to kick you in or out. And we can do a normal broker stop loss, take profit, or a decoy. And we can also do a broker stop loss or a hidden stop loss if you're worried about the broker being able to see your stop losses. And we can also place our levels, adding a pad for the spread, or we can take that off, and we can also multiply our spread as we add it on. Now you notice as I click on buttons, things appear and disappear. That means that as you're choosing things, only the things that are pertinent to how you're setting it up are appearing on your display. So I've got this up here just to show kind of a basic trading system. And let's move this out to like a 1 hour. So we're trading 3 moving averages. And let's say after we get our moving averages stacked up, we're looking for retests of a moving average here. And we're going to trade off of that. So let's build a fast trading system using ATM. I'm going to go ahead and keep ATR management on, but we'll do this as simply as possible. So we're going to take a trade when price moves down into the area between the fast and the next fastest moving average and bounces back out. So let's take a look first at the stop loss. So we're going to stop it, set a stop at, let's say 2 ATR. Now, an ATR is on whatever time frame we're calculating our ATR on, or, remember that's set on the general tab where we are saying that it's going to be the current and the current. So 2 ATR, or 1 ATR, I should say, is going to be the average size of the candle from top to bottom. So this one is obviously much bigger. This is much smaller, and we're going to be getting an average. And the way that was set up was the average over the last 50 candles. So we're saying that 2 average candle lengths is going to be our stop loss. But we can also say we can stop it by structure, and structure by fractals. So these little guys here are fractals, which is defined as sort of like recent high and low peaks. So let's set that up to a 1 fractal because we're looking at a bounce. And we can set up a pad on that if we want to. So let's set up a 1 ATR pad. And I'm going to turn lock profit off. And then take profit, I am going to turn take profits off. So no take profit on this. And we're going to go to trailing stop. And let's say we want to trade this with a moving average trail. Now, this is a 25 period EMA. So we'll set our moving average period to 25 periods. We will not put a shift on that. And so when do we want to start trailing? We can, let's trail that immediately for right now. Now, here is our visualize. So if it's green, we're buying. If it's red, we're selling. So we move down here. So we've done a retest. And this is our trail as it's moving up our moving average. So we open our price here, or we open our trade here, and our trailing stop comes up, and we come down, and right here on this candle is where our stop loss takes us out. So we can see here, we gained 64% on what we risked. So our risk was to our initial stop loss, which was our last fractal plus a 1 ATR pad. And we gained 64% on risk. Now, if I go over and we take this one at this level as it's breaking above, now it keeps us in this trade all the way up to this point, at which point we've gotten 200% on risk. Now, if I turn off our trail. Let's do the same thing with an exit. We'll do a moving average exit. And we will start this immediately. And now we are doing this on a close. So when it closes below, oh, I've got the wrong EMA, 25 period, apples and apples. So here we get out when we first close below. And you'll see that the difference isn't that much. But what you can do is have your stop loss maybe trailing up on the 50. So let's take a look at that. So we do our trail stops and we go back up to our moving average trail. And let's put our stop loss on the 50 moving average. Now you can see here's our exit level coming up. The red dot shows that the exit is what triggered it. But let's say you're doing your exit level and you get a really big candle that paints down. If you're relying strictly on your exit method, you're going to close down here or wherever your initial stop was. And if you have a stop loss running that's trailing up for you, you can get out here rather than accept this great big loss. Of course, you can ignore circumstances where the market gaps, there's no stopping that sort of thing. But this is the basis of what this is. And what Jenny's going to be doing is talking about how to specifically apply this to the simplicity system.
Okay, that's my cue.
It is, unless there are specific questions. Somebody asked different settings for different pairs. That's an excellent question, Robert. And yes, you can. However, what I want to show you here, okay, using these same rules, let's go to US 30. We have our things are stacking up. Let's find a place where it's trending nicely. We'll put in a cell here. So now we've created this, we've retested, and oh, I changed pairs, so all of our work we just did went away.
I'll show it. Don't worry. I'll show it and I'll go over that.
Okay. But the idea here is that we can use the same rules for any pair on any time frame if you're managing with ATR. And that's the beauty of ATR. In fact, when I developed ATM in the first place, the A was going to stand for ATR. But I thought that was just too many letters. So I don't see any other questions here. So unless somebody has other questions you want me to answer, we'll turn this over to Jenny.
Well, we'll keep all the questions. So any questions you have on that, hold on real quick. And I'm going to show you a couple of things. And then if you have questions on management or why this is so significant, we'll go over those here in just a second, maybe. So I'm going to take the floor black. I'm going to go, oh, this will stop sharing that screen. I'm going to go, oh, come on. Microsoft Excel. It's all or nothing with these people, all or nothing. Seriously, gonna pick, I was like 50 windows. Okay. So before I go over to my charts, I'm gonna come back to this one more time. So those numbers that he just talked about, right? And the ATR thing, I really want to talk about, Robert. Great question. It's all relative. It's all relevant. It's all everything. So this is everything. So I'm going to stay on this for just a second. You noticed what he was saying, that percentage, the percentage you saw, 200% gain on risk. That's very same what this is right here. Okay. So his was 200% right there, for example. Now that's not always going to come out well because in my case, I scale out. You'll see that here in a second. That's what we're doing here, is we're managing in a way that's duplicatable trade after trade, which means taking the human out. Because I don't know how many of you guys take a trade, got scared, take a trade, had a moment with your spouse, took a trade, went to the mall. I did that a long time ago with Bitcoin. My brother was calling and it was this whole big moment, and he's waiting in line because he's a super gentleman like that, like a bajillion hour line for Santa. I'm getting my kids ready. My laptop is on my table. And I did not protect my trades. So what happens? I didn't protect them. I didn't move a stop loss and a profit. I was up like over $40,000. This was back in, gosh, 2019, maybe. It was a lot. I mean, in all fairness, that's not nothing. And my Apple MacBook is on my kitchen table, and I walked out the door. I came home and it was all gone, including, the majority of that account. That's what we're talking about. So I'm sure all of you have had some story like that where you forgot to managed emotionally. And then, of course, no matter what you're doing, none of your trades are following any kind of systematic pattern. So sorry, not a great storyteller here, but the idea is that when you take a trade, everything is managed in a numerical, mathematically accurate way. So you can achieve things like this. So one more share before I go to new share. Oh, how am I going to do this? Oh, that's how. I know how. So yes, we're doing compounded, did not share. Interesting. Just shared my whole desktop. Go figure. Yes, we're doing compounded account challenges. Yes, that's what we're doing. But we're also, I'd like to start to work with funded accounts as well, a little bit more. And in order to stay duplicatable in our class, NB is a broker. The link is in the link tree. They also have a funded account challenge. So little different than FTMO, but the idea is you're using somebody else's money. You're keeping the majority of your profits. You have slightly looser or tighter, depending on the funded account platform you're, discussing or using. You have slightly different standards, and you're able to do the same thing. Difference also is you have better leverage on this one. So if you're interested in doing the compounded or funded account challenge, please make sure you use this link. And now I'm going to go stop share. So for everybody who has been having problems with simplicity or trade ideas or trade signals or just their general management, this is what I have been doing. So I've got two sets of settings, and Scott did a great job of kind of introducing these. Honestly, in his defense, he is not only immeasurably intelligent and just a genius on all accounts, but this is a lot of stuff to discuss. So there's no short version of how do I explain 19 billion mathematical principles and 19 billion things. And you guys all know who worked with me for a while, I am the most human person on the planet. So I can kind of simplify and unlinear all of this stuff pretty darn well.
I'll also say that if you go to my website, which is cooltradingtools.com, and you look into some sections in there, there's a lot of information about ATM, including what all the different trailing methods, exit methods, kind of what everything is. There's a lot of video content available in there that you can dig for. So there's a lot of information on a lot of these details, but Jenny's going to talk about kind of specific implementation here.
Very true. So yes, cooltradingtools.com, like he just said, it breaks it down section by section. So first thing I'm going to do before I even continue is I'm going to go over to my file. I'm going to load up one of the sets of settings. You'll notice I have a bajillion, all different kinds of different names in the whole nine. But one of the sets of settings that I use, this is the one that I've used with the trades I've been calling live on YouTube every 2 weeks. When people ask about simplicity settings, these are the ones that I would be using, and these are the ones that are comparable to the ones I would recommend. Now, I am in no way, shape, or form saying that these are the end all be all. I am in no way, shape, or form saying that there are not better ways or other ways to do this. I think this is a great starting point, and I want to show you what that looks like if you took a batch of 30 or 50 trades and managed them strategically and in a duplicated way, what you could accomplish at the end of 30 trades, especially if you were compounding. If you average an 80% accuracy, even 70% accuracy, you can in real life take a couple $100 account on the Forex pairs, not indices, but Forex pairs, and take that couple $100 and turn it into, 20, 40, 60, 80,000, or of course, tighter, much less risk, can't do 10% risk, but you can do it much smaller on a funded account challenge because you're using bigger amounts of money, do 0.25, do 0.5, and do very comparable things. So starting at the top, I'm on USD Chef. I'm going to go ahead and kind of expand my tool a little bit. And we're going to just go pick, somebody pick a pair in the chat. Don't care what pair. Y'all are not an index. So you're saying if you join the challenge and sign up for the group platform, I assume that will allow the EA, which is ATM. Yes, though that allows the ATM. GBP odd. George was first. GBP odd. It is. So let's see if I can't find it. we got a couple GBP odds. Interesting. I wonder why. Why you guys like that pair? Okay, I'm on the 1 hour time frame. So I have nothing bad or good to say about any strategy. I'm only going to use this strategy as an example. Okay. Strategies to me, I think the better I've gotten at trading, the more I realized it has nothing to do with the strategy. It has almost everything to do with the management, your lot sizes, your account, the lot sizes in relation to your account size, I should say. It has everything to do with that based off of the strategy. So this is GBP odd. I'm going to zoom out, make it super ugly just so we can go and kind of see. We know this pair has been acting all kinds of janky. Let's go up to a bigger time frame. It's consolidated for months on end. This is the weekly. It consolidated, popped up and down. Other than these huge swings, like it hasn't been doing much on the smaller time frame. So just to see it on a bigger picture, we know that. Even given that information, and I didn't pick this pair. So I'm not going to be able to, go and micromanage or manipulate these settings. But I'm going to go turn my visualize on. So if this was my entry, I'm going to zoom in so we can see this is a wick. I would be taking it at the break of that kind of area. I'm going to hit escape to lock my visualize in place. Once I took this trade. So for example, if I had the scanner or if I had any method to get alerts on my trading strategy, regardless of what it is, I'm going to get an alert. I might be out. If it's during my trading time, I'll take that trade. Even if I took this trade from my phone and this was running on my platform, right? I need to know what the lot size is because this actually gives you lot sizes too with the buy sell button based off of risk. And that's kind of awesome. But
Which
I took the trade.
Plugins I talked about.
I'm sorry.
Which is one of those plugins that I mentioned in the first presentation.
Okay, gotcha. I don't think I have it up. I probably should. Yeah, why not? Let's bring it up. I got a lot of stuff on here. Is it 1.2?
3.
Okay. I hope I have the settings loaded. I don't know if I have them saved. We'll see. Load, buy, sell. Gotcha. Okay. So now I've got my buy, sell buttons loaded if I'm in front of my computer. So if I hover over this tells me that if I take this lot size, that's a 10% trade. I know that because this is programmed to 10%. Now these little buttons in the center, if I go to half of that, for example, I hover over it, it's going to take a second. Mostly I'm zooming. Notice my lot size for this account, just a demo account, I just use it for classes, is a 2.0. That's 2 standard lots, right? It's $20. So, well, not quite because this isn't worth $10 a pip, but you guys get the idea. So here's where we're at. I take this trade based off of a duplicatable, systematic amount. I'm taking the same risk on every trade. That's key. But look what my management's going to do for me. I'm going to enter based off of this break. I got my little buy signal based off of this strategy, and I enter. And I zoom in, and I'll show you what these settings are so you guys get an idea. If you don't have the ATM, you can still create rules like this in your real trading if you honestly want to compound. You can create rules like this in your real funded account challenges or compounding challenges or just your day-to-day flat percentage. And that's totally fine too.
Yeah, and to be clear, what the risk is in this particular case, let me pull up and annotate. It's the distance. You take the distance between the open price and the stop loss. And you say that if price moves down to my stop loss and takes out my trade, that is my 10% right here. That's 10% of my account. So your trade is sized to be that. And that consistent basis is important if you're going to try to compound your gains.
Or even if you're just looking for the straight 1% and you're not actually, you're not compounding per se, you're just growing and you're withdrawing that. Either way, you still need to know that stuff. So, but okay, so buy sell buttons, that's where I'm getting the risk from. That was definitely worth adding. I open here, OP, right? OP. Notice all these lines and stuff that's painting. I know this is really zoomed in. I'll minimize this for the second. What this is saying is I'm in, sorry, that's my magic mouse for you. By the time I hit here, I'm already scaled out of part of this position. I hit take partial one. By the time I hit here, my trade is now locked. I'm not locking in positive. I'm locking in negative to give this some swing room, right? I kind of have a more hate than love relationship with this because when you jump in and it knocks you out, hate that. but I understand some people need it. That's why it's set on these settings for the masses. Of course, take profit 2, exit level kicks in, take profit 3, trailing stop kicks in. I literally have no take profit. So not on all trades, but 5 or 10% of my trades, I can let this baby run for like 20 to 1. I can let this baby run on the off chance we have that crazy move like this morning. You know, the news, the US dollar was like, bing, right? Just like that, I have the opportunity to make that kind of money when and if it happens, which we all know doesn't happen all the time. But at least the door's open. It's open to do that. So I'm going to go over what these settings are. So you can either, if you don't have the ATM, that's fine. You can duplicate or find your own. So have a starting process and then go a little bit deeper into you. But before I do that, I want to show you, this is 100% risk on gain. I, again, have a love-hate relationship with this, but it's also 273 profitable pips. That's what this is. So 273 profitable pips on the 1 hour time frame on a Forex pair. This isn't even like an index. That is not bad considering it took you a couple of seconds to do this, right? On a $20 standard, I don't know who's got a calculator. I don't know. This isn't going to be dollar for dollar either, but I'll pull this on screen. So at $20 a standard, remember we're scaling out. So it's not, the math is a little janky here, but just to give you a big picture, right? So times, I never know which one this is, times 273. Okay. This one trade is $5,468-ish. Granted, this is not worth exactly $10 a pip. Please understand this is a roundabout kind of concept, but you get the idea. That's insane for something that took a couple of seconds. Now, granted, this is a bigger account, but still, you find a couple of these a week. Can you live off of $20,000 in a month? That's not even including compounding, by the way. That's not even including the fact that the next trade has the potential to be bigger and bigger and bigger. Can you live on that? Anybody like $5,000 in a single trade? Because seriously. Breaker said, yes, ATM has definitely protected my trades, right? Is that enough, Mike? You think so? Is that not a bad way to be? I think it's not a bad way to be. But let's keep going. We know that simplicity is a great system, but it also sometimes, you know, look, this one right here, we had a potential situation, but if this is our repaint evidence dot, if you will, notice how this is where it comes. Okay, this is where it comes in. I really want the continuation. So let's just say we took this, even without that, this one hit escape is a loss, and that's okay. It's real life. Okay, we can't only show the good, the good, we have to show the real. Based off of how I'm managing, this is 100% loss, right? So let's just go take a look at any of the other trade. I don't see any other repainting dots. I might be missing them. Dun, dun, dun. Let's find out. Nope, so we're going to keep going. So we got one loss. I just want to show you real quickly. There should be one there in theory, but there's not. This is that Sunday night. That market went crazy. I'm going to minimize. We're going to sell here. So I usually take the continuation. So I'm going to hit sell. This is not great. This consolidated for, I don't know, like a decade, right? This is for the 16th into the whole week of flatness, doing nothingness, but you still were able to get out with 2% of a gain on this with the management. So instead of like, imagine taking this trade and you're freaking out. There's other people are posting their stupid screenshots of, hey, I made money. And of course you're in your head. There's so much emotion. There's so much psychology that goes into this. Somebody else is posting, this is what I did. And you're stuck in this trade. You make all kinds of reactive decisions. You make all kinds of good, bad, and ugly decisions, right? I got in and then I got back out and then I saw it moved and then I took another loss and I just didn't know what to do. Most people are not going to hold through this. Most people are freaking out. They would have entered and closed a bajillion times because they're unsure. But if you have a system in place that is duplicatable and you could do it over and over again, even on a bad moment, you still got 2%. So of course I have to harp on that for a second. Here's our next evidence dot. So assuming you took this kind of concept, hit escape, you got, what is that? 5%, right? You close out a 5% win. Okay. Kind of concept. Just
a buy.
I'm sorry. This
Would
is
that a buy evidence dot?
This is a sell.
That's sell. Okay.
Yeah. Here, this is 68%. So this is 6% gain based off of my settings. Now your settings are going to be a little different and I'll show you what those settings are. But here you go. This one's a little late to the party. Not a great way to be. So your risk, your gain on risk is a little different because your stop loss is kind of far away. But still, you ended up with a 6% gain on this trade. Not a bad way to be. Remember, you took this quickly. You did not think, you did not freak out. You have a set of rules that say, hey, I'm allowed to be in 2 to 4 trades at one time. I let them play out. I manage them strategically with a duplicatable set of rules. And when I have more room in my account, I'll check. When I don't, I turn off my alerts. I come back the next day. This is all very, very duplicatable. So hit escape. And I'm going to turn that off. Let's look for a couple of others. One more pair. Somebody pick one more pair. Here's a sell. There's some other evidence dots. This one doesn't give us the continuation, so we don't win or lose there because I don't have the continuation to take that. Here's our sell. This one's kind of awful because of how it manages. We got knocked out. I really think it should have been worth a whole bunch more, in my personal humble opinion, but it wasn't. And that's part of real trading. So this one is not optimal for how you would have. It's because the risk is so high, but you still closed out with 4%. Not a bad way to be. No buy there. And then now, of course, we're out of history. So GJ, the dragon. Let's look at the dragon. Why not? And then we're going to go over the settings. And actually, I have some other settings. I'm really, really nervous to discuss them because if somebody is a late enter, this is going to beat them up really badly. There you go. You got 14% on this one. Okay. Give or take, right? 100%, 14%, somewhere around there. And remember, this happened without you having to think about it, without you having to make all the decisions we all know we make. This one, let me zoom in a little bit. You get the continuation kind of late though. So you, depending on where you entered, because this is where this painted. So my rules are it has to break and make a lower low. So I would have, this is that kind of what I call negligible trade, not win or loss. I'm okay with that, plus or minus 2%. I don't even count that on my spreadsheet.
It took me a minute to sync up with what Jenny was saying with 14%. And I'm probably not the only one. So the dime dropped for me. What she's doing is she's calculating her 100% or 140% and then applying that to the 10% risk that she's applying. So that's 14% on her account, not on the individual trade.
So not a bad way to be. Thank you, Scott. Thank you. Thank you. But you guys get the idea. So again, to show the good, the bad, and the ugly, the purpose is not to say that this is perfect. This is not. And the purpose is not to say that this is the only set of management. It is not. The purpose is to say, so many people are taking this trade. I'm going to turn off my visualize. Okay. Well, no, regardless of what system you're using, they take this trade. They maybe did not protect. They saw it come back. They closed the trade. It moved again. So they said, okay, wait, we're going to pull back. They make all kinds of decisions. And those decisions are, in my opinion, what's making so many people lose at trading. I am not the smartest cookie in the cookie jar. I am not, that person, but I promise you, if I can do this, you can do this. And I think one of the reasons I can do this is because I can say, here are my rules. Here is how I'm going to let this manage. And then I can get off of my computer. And even if I'm on it, I'm not looking at the trades and go on with my life. You guys are making too many people, too many people are making 500 decisions. And by the time this is done, they're either at break even, right? They've made no money or they've lost money. They've missed this whole move because they don't have a system in place. So, and without a system, you're not going to do well at the funded account challenges, and you're definitely not going to most likely succeed at compounding. So kind of give you an idea. Let's look at a couple more. This one, we don't really get the continuation. Here we go. Here we go. Now, 24. This isn't a bad example, but instead of losing 100%, so losing the full 10% of your risk, you only lost 2% because you had good management in place. Not that choked your trade. You can choke it if you'd like. Some people do. I don't. So these are, again, only one set of settings. There's plenty others to choose from. Kind of just give you an idea, but that's enough of that.
Yeah. And also, Jenny, if you just pick a trade, whichever one it is, and escape, freeze it. What you can do then, if you're developing your rules, is you can go and say, play with your trailing stop or with your exit method by going to that. So Jenny, if you go to your trailing stop, and right now she's using a fractal trail.
Yeah, it got me out. Let's go to the exit because that's what got me out.
Okay, so
you
can make these adjustments and see exactly what would happen. So it shows you right away what those rule changes would be.
And I have to at least say, please don't make a whole bunch of adjustments based off of one trade. Whatever these settings are, they need to be able to help you in moments like this and in moments like this. They need to be able to help you in all market conditions, consolidation, okay, and of course in swinging moves. So that's why you'll notice most of my settings all follow very comparable suits. I'm a creature of habit, right? So they're pretty comparable, more so than I wish they were, but I always fall back to the same old things on, at least in this. So, but just to give you an idea. So let's real quick talk about what this looks like. General, first and foremost, I always have a spread multiplier, which means my management is going to have a little bit of a cushion for the spread. This helps me a whole bunch, especially on these baby timeframes when brokers don't necessarily kick in your trails and your exits or your stop losses being moved because it's tiny. So depending on the broker, if your stop loss is too close, it just simply won't activate. So this helps me mostly on the baby timeframes, but I keep it out of habit. I'm typically always managing on the 1 hour. Even my scalp not my 1 minute ones where it's me manual, but the majority of my trades I'm managing on the 1 hour. I have found that the 1 hour ATR and the 1 hour management, especially when you're trading with the bigger picture, it's just a great way to be. So that's a big thing there. Current time frame for where I'm getting the candles and the data. Always have some slippage room. And I have it managing all trades. So Scott mentioned this in his little moment. But if I have this on one chart, it's going to manage any pair I trade, any pair I take. You can, of course, put this on a current symbol only. So like if you only wanted this to manage GJ and you wanted to kind of micromanage your US 30 ones or whatever, you could do that too. But for me, I manage all trades, which is why it is so stinking important that I use ATR. Because if I had some settings saying, hey, protect with 50 pips, and I try to do that on, let's close this off. If I try to do manage with 50 pips on GJ and also on US 30, okay, well, that's not a valid trading idea. If I said, hey, I want a 200 pip stop loss, and I'm not in any way or shape or form saying anything bad, I know we all started there. I just don't want any of us to end there because it's not a way to be. If I do that, look how different this is. It's not a duplicatable way to be. So pips, not a good management, at least for me personally. So back to GJ, because that was the requested pair. I guess it doesn't matter, but that's my general tabs stop loss. I'm typically using 5 fractals back, which is kind of like saying, hey, I'm using structure. Those of y'all who know me know I trade with structure and I always give a cushion. In this case, I'm only using a 0.5 ATR cushion. That's 0.5, that's half of the ATR on the 1 hour time frame. So half of the ATR, which means if this is structure, I'm giving it about 30 extra pips just so it can make a spring. I don't want to have my stop loss here, have it spring up and then of course be right. I'd rather give it a little bit of extra spring and live with the lower gain on risk than not have this, at least for my testing. This automatically locks my profit. I typically have this turned off on the majority of my trading styles because I don't prefer this. But for the people and the masses and duplication, this is really, really, let's try to use this example. I don't know if this is a good example. It's not a good example. I thought this for sure would knock this out. Nope, it's too loose. But see this, Scott, do you want to get out your annotate? If this is where my stop loss is, that lock profit, I'm not moving it to my open price. I'm moving it still at a negative, but it's allowing me to at least not take the full 10% risk once it's moved, at least. Once it's moved to ATR, I'm not taking a full risk. Plus, I've already scaled out anyways, but that's what this is doing. So I'm not in love. I keep it on because I think it's helpful to a lot of people and I wanted to create something for the people, but that's what this is. Once I hit 2.5 ATR, I'm locking my stop loss. I'm moving it up to negative 2.5, which I kind of like that. It's really, really loose. Trailing stop, Scott did not mention this and I'm surprised. So this one, you'll notice that there's no orange dots here. There's just the aqua ones. A trailing stop just has to touch, which means if candles touch it, it's out. The aqua, the exit, means it has to close on the other side of. I love my exit manager the bestest, and I love my take profits the bestest. I love, 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 love that. So you'll notice these aqua dots, it can touch them all day long. It can hug and all that good stuff, but it must close to get me out, which means I can really, really let this run a little bit better. So For my trail, I've set it one fractal trail back, starting at 6 ATR. This is for simplicity. This is a 1 hour system. So I don't want that to be too tight. Exit, I'm using the Donchian channel, which is basically like a set of candles. Look it up if you're not sure what that is. But still love it. 3.75 ATR. That means once the move has made 3 times the ATR in this time frame, I am now protected. And meaning, hey, if I make any lower lows from the last 9 candles, I'm out of this trade. I'm protected. So to give you an idea, that's my trailing stop kicking on. This is my exit kicking on. And now all of that's managed for me. So I'm not thinking about it. I don't have to be reactive or so-and-so posted this other trade. I'm going to close this and do this other thing. Or, hey, this is in drawdown now. I don't know what to do. Or, hey, this isn't moving. It's consolidating. I don't have to make any of those decisions. They're already made for me because I made them once and now they're doing what they're told. So last but not least, take profit. This is always a double-edged sword. Obviously, if we delete that, this number goes up a whole bunch because then I'm not scaling out of partial portions, at least on this move. But this, me scaling out of portions of my trade helps on all those baby moves that maybe you turned out to be wrong on your trade. Instead of, hey, this doesn't end up selling, at least I've got a couple of take profits. My stop loss is a little bit closer. So now worst case, I've lost 2% or I've lost, 1% or I've gained 2% versus losing a whole 10% trade. So I love this.
To note that the scale outs are only useful when you're trading in kind of in consolidation. They work against you if you're in a good trend, because obviously you want to capture all of that trend with all of your risk. But it's there to protect you for the times that it doesn't do what you want it to do.
Yeah. I don't know, Scott, because think about it. I think I would have to have a counter narrative on that. And the biggest reason why is because even when you're against, when a big trend happens, let's say you took it, but this pulled back, if I got some of this move and then I got to make a new decision, then at least I am profitable. But even on big trends, if you enter on the biggest, bestest trend and it does what it always does, which is retrace, right? At some point, you've given all that back. And those people, too many people, including myself, make a decision on that pullback. So this,
Well, I don't know how much we want to go down in the weeds.
Yeah, true.
But even with that one that pulls all the way back, your exit method is getting you out. And if you hadn't scaled out, you still have been better off.
So opening price on this one, because my exit's starting late though too. So because my exit is starting later. So yeah. I don't have a big example on screen, and you're right. But just either way, you don't have to have any of these settings. You can decide what works best for you. These are just some methods I hope people start to entertain. Like, I don't care whether or not you have ATM. I don't care whether or not you decide you want to trail, exit, take profit, or lock. Those are all personal decisions. I just care that you start to think about these things enough to where you can effectively compound and or pass a funded account challenge to become a profitable trader. That's the end all be all for me.
And the nice thing about this is that because you can back test so readily, you can go back and look at the trade signals that you would have taken and see what's going to happen and look at that over a large number of trades and figure out, what set of rules is going to work best for you. Because working best isn't always about what gets you the most money at the end of the day. It's about what is going to let you sleep at night. If you're a type of person who has a really hard time taking a full loss, maybe getting out, taking some scale outs and taking smaller gain on risk is going to work better for you if you're more likely to get it. Maybe you're the type of person who'd rather take a lot of small wins and a few big losses than, making it work out where you might have gotten more money, but you would have taken more losses. So it all comes down to a you question, as in everything in trading.
So Vince, I'm answering your question in the chat. Great point, Scott. Great point. So we talk about that a lot. Some people don't mind taking 100 trades and losing 50 of them. That doesn't mess with their psychology. It doesn't eat at their, that all the stuff that goes into all those books, right? Their self-worth or their wounded spots, it doesn't affect them. And that's fine if they're still profitable at the end of that 100 trades. Some people, they go take 3-4 losses and their entire emotional well-being and psychology is all messed up. So now their logic and their decision-making on those next trades are completely different. So for that reason, it's really important that you know which one of those kinds of people you are, because if you can afford to take a bigger loss once, kind of like, can you take one big hit to the face and like, okay, you're fine, you'll be okay? Or can you take all those little jabs, like the dripping water on a rock concept? So
I
that's,
heard a great quote this morning. It was borrowed conviction never works out.
ooh, I like that. I like that a lot, actually. Okay, so that's what this also, all this stuff is. So if you have questions, comments on ATM or management particularly, because for everybody who's in the morning classes, I really, really want, my ask is that you have some defined management in place prior to starting the compounded challenge, prior to starting the funded account challenge, because if you don't, your odds of success are significantly decreased. Not that it's impossible. I'm that girl who thinks everything is possible, but your odds of achieving it are very, very low. You don't have something in place that's going to help you manage, and it could just be your own rules. That's fine. But if you don't, it's a uphill battle. So anybody who's got questions on that, what is the name of that prop firm? Vince, please go to my link tree and click on the MV broker. My hope, I think I have like 2 people on that broker right now. I don't even know. It's really, really low. But my hope is to, Hugo's Way is my mainstay. AFX is my high leverage. And I've got Henko, I've got MV, I've got LQD and a couple of others. But my hope is to make MV that third kind of the one I recommend for prop firms and all that good jazz, mostly because if I can trade in a class on that broker and I can do compounded with people who want to compound, and it's the same broker, which means potentially, in theory, comparable price action and candle formation and, current prices, then everybody wins. So I'm hoping to get as many people over to MV as possible, because that's the one I'd like to use. Because I can do both on it is why. FTMO, you cannot. If you get a signal that does not follow through on the following candle, how many candles would you wait before you say it's a non-trade? You mean on simplicity? So I don't have like a set of candles. For example, unless you're watching this every hour on the hour, this is many hours in between, right? So unless you're watching this every hour on the hour, this is, what time is this? This is New York. So this is the next day. This is evening, right? This is London. And then this is the next New York. Well, I'm still sleeping until about here. So this is the next point. It is really going to depend. So because it's easy for me to spout out 3 candles, that's not real. That's not reality. This is an hour time frame. So if I came and I saw this and I saw it retested and I happened to be around for this and I had room in my account to take this trade, for example, and this was my trading strategy, I've seen this. This is our trade idea based on this strategy. This technically gets the follow through, and this is technically the retest. This is a better entry than this is, right? This is better than. So I wouldn't mind taking this for the purpose of the YouTubes that are live, since I have to have it duplicatable and definable, meaning if anybody goes back and tries to say, test, or do the same thing, I'm always taking the break of the fractal. So if by chance on that call, this is where we're at, and let's just say this is the candle we're on, I say, hey, okay, we're going to wait till the break of this fractal. And at the break of that fractal, I will take it, knowing where my stop loss is plus room, saying, okay, if there's enough room, I will take it based off of that. So not necessarily a set amount of candles. There's a lot more that goes into it. So I don't have a set amount of candles. It depends on how it's setting up. If it's consolidating for a long time and doesn't give me any pullback, that's a little different. But even then, I'd probably wait for the breakout of that box, even still.
Wayne asked what would be good settings on ATM for scalping like Ricky does. If Ricky's on, he can answer the question, but I think that what Ricky's doing is sort of throwing a stop loss and take profit on the screen and adjusting.
So let me work my way down here. So what would be a good setting for ATM? Wayne, watch this. So because this is using ATR, now the only downside is this is using the ATR on the 1 hour, but because this is using ATR, if I go to the 5-minute time frame and I zoom out, now granted this is using a 1 hour ATR, and I visualize, okay, I hit escape. And granted, this is a great move because, well, this is a swinging move. This is a 5-minute move. But notice what it does to my gain on risk. It 3 to 1, 300 to 300% based versus my risk. So if I hit escape and I go over to this area, kind of get that follow through, I hit escape, I'm still 200 to 1. So now granted, this is a perfect move though, in all fairness. This is a beautiful impulse correction. Boom. This is perfect. Not all of them are perfect. And that's still using the 1 hour, by the way, the 1 hour ATR, just so we're on the same page. And I'll show you, I didn't pick this pair. I'm on the 5-minute time frame. Here we are. This is 190. So this is almost 2 to 1 risk gain on risk. 2 to 1 is what this is equaling. And that's using the same 1 hour time frame. So the blessing in that 1 hour time frame is when I'm trading a really, really small time frame and I'm scaling out at this point, heck yeah, I want to protect if it's 1,000 pips on US 30. I mean, yeah, I want to protect. Of course I do. I'm just protecting at a higher ATR value than the 5-minute, because the 5-minute ATR is only 3 pips and the 1 hour ATR is 58. Well, this is pips, right? 58 pips.
Pips.
34. Wow, the 1 hour ATR is 34. God, 5 minutes, 34. Okay.
That tells you how much hash there is inside of the hour.
Yeah, right. Actually, I've been really paying attention to that time frame stuff, but to kind of give you an idea. So I'm not changing the settings. I didn't change any settings. I just changed the time frame. So this is one trade idea, and I got 2 to 1, 2.3 to 1 risk to reward. Okay. This is late. I would not take this because by the time this paints, it's too late. So that's too late at all. And then of course here, and there's one other set of settings that I'd like to at least entertain, but here 2.7 to 1 and the same. I did not change the settings. The difference is I'm managing with 5-minute structure and protecting at 1 hour ATRs. So 5-minute structure still, but that's the difference by changing timeframes and using current. So that's the difference. But to kind of give you, let's look at some of these bad moves because those were all perfect. Let's not look at the perfect. Let's look at the bad ones. So even on this one is bad, but because of that is so far away, we lose the whole trade and we don't protect at all. Nothing kicks in yet. Now, if I change this, the management time frame and this to current, watch what happens. It's going to change how this trade plays out. Look how quickly I'm managing all those ATRs. So I am scaling out and it does activate. So that's just changing the time frame. But I like to use 1 hour ATR for a lot of what I do. So, and you can use any of these settings that way if you're using ATR.
It occurs to me too, there's a lot of people are going to look at this ATM panel and think this is super complicated. And yes, there's a lot of flexibility built into that. And what I would recommend is that you start with what you know. Use the language that's in there that you understand. You can build simple rule sets based on what you know, and then start learning and expanding and playing.
Scott, I did something. I knew that, but I was like, what? I was trying to type in the chat. Well, I know that's part of the Swiss Army knife. I was like, I didn't think I was there. Anyways, but yes, if you're looking to do that NB challenge, please use that link. It's in the pinned post. So you can do any of that stuff. This is all based off of ATR and structure. One more set of settings real quick. And let me go. I was literally looking at ATM again on cooltradingtools.com a couple of days ago, Gabe. Gabe, I really want people to, even if you don't have this, at least define your own rules. Even if you don't want this or you're not in a position to get it yet, that's fine. My hope is that we can meet people where they are, right? So if you're in a place where this is not in your realm yet, this is a very advanced tool. Yes, it's a lot, or I get it, but then at least cultivate rules that you can go get your batch of 50 trades on. Because if you cultivate rules that say, I'm going to manage this way consistently as humanly possible, your odds of success of compounding, of growing, of profiting, of withdrawing, of funded account challenge passes, all of that stuff are exceptionally higher. So NAS trade this morning should have hit take profit 1. I know we're not on that subject right now. NAS trade this morning did hit take profit. And so did US 30, and they all hit some take profits. I haven't looked back. But not a bad way to be. So
take profit, whatever yours was, because it shot up big time.
They did. That was perfect. We just wanted the bounce. We got the bounce. One what does anybody else have any other questions? So I've got one other set of settings, and these are the ones I'm the most concerned with. I'm very
I
apprehensive.
have a question.
Hold on. Somebody's unmuted. Hold on. Listen, Linda Cordrick, that was you. Mike, we don't raise hands. We're not that fancy. We probably should. I know I should organize my classes better, blah, blah, but come on out.
What's going on, Jim?
Yes, I like to ask.
Oh, yeah. Hey,
So
hey,
Mike, it's you. Cordrick keeps unmuted, I think, on accident. Go ahead.
okay, no problem at all. Hey, hey, Jenny, I do have a question for Scott. I used to be in the scouting group with you guys, and I remember this as the beta. It was the beta. It was the beta version of it. What do you feel has been the monumental progression of what you've been able to do with it, Scott? Since January, because I was in like January and February, I was in the scouting
Yeah, I'm
group.
trying to remember what all has been added since. Certainly the risk management stuff has all been added.
Right.
There have been, bug fixes along the way. I appreciated having, for those who don't know what the whole beta thing is all about, pre-official release, what I did is I released copies of ATM, had it on a different license that I could expire. And I let people use it for free for a period of time, and it could report their bugs. I worked on a lot of new features and brought it along during that period of time. Now, it has definitely grown since then. I mean, even since it was officially released, the ATM Expert, I think, is at, forget how many versions have been released since the initial one, under the one dot stuff. It was released at 1.0 and it went up to 1.14 maybe, and then came out at 2, and now it's up at 2.05. So it has definitely grown since then, and there are more ideas still coming up.
Oh, okay. All right.
And I should also, I'll also just quickly say that, when you buy it, it is a lifetime license. So as I come out with new features, new major revisions with a lot of new features, you will be part of it forever. I won't cut off development and then sell you a new product. That won't happen.
Yeah, you're an honest guy. Yeah. For what I remember, man. And is Derek still in the scouting
No,
group?
I missed it, Derek. No, he's not in. He's not in there.
Funny. All right, yeah. I think that was basically it, because my situation was this. I'm more of a scalper. That's why I always came with you, Jenny, and we had fun. We talked a lot, you know what I mean, and got did very well. Followed your golden strategy. But my situation was, what I found out was that when I was making my withdrawals, as you was telling us to do, when I was making my withdrawals, I still had the mindset and that risk management portion, like you were saying right there, Scott. My risk management would still be a higher lot size and so on and so forth after I had started doing withdrawals and stuff like that. And
Okay, so I want to talk on that for just a second. So we have a lot of open discussion, and this might not be the best time. So I'll talk on this and I'll show the other settings real quick.
Okay.
But one of the biggest things, so as you guys know, I've worked with a couple different companies, a couple universities, some big launches and great opportunities. I've been incredibly blessed. One of the requests I got was to trade on higher timeframes, and people couldn't come to classes, so they wanted more. It's fine. We accommodated. I adjusted. We're doing what we can, where we can. But when I went to a slightly higher time frame, which again, I literally only even considered that because of the requests I got for classes. But what I found in the process, so in my own evolution, was, let's see if I can't show this. This is a great example. So if I hit escape, okay, and I am managing on, oh, this is a bad example. Let's do this. I sell this right here. My stop loss with these settings can ever, well, my lot size with these settings are what? 8.4, right? 8.4. That's a
And
big.
that demo
well,
account
I-
is for 20K still.
Yeah, so 10%, and that's just to show you my lot size is an 8.4, which is a lot, but it's not like impossible with the account size that this is. But it's an 8 standard lots. That's $80 a pip based off of $10 a pip. And not every pair is worth that much, but to kind of give you guys an idea, rounded numbers here. 8.2, whatever. I'm really honing in on that, and here's why. So if I come back in here and I go back to, oh, that's using whatever. Now, of course, I want to put my foot in my mouth. If I go to the 5-minute time frame, I should have locked that or marked that, but I did not. On the 5-minute time frame, if I come down here and I'm now using a 5-minute time frame stop loss, I'm using a tighter stop loss, and I'm still doing a 10% risk. I'm going to hit escape. Actually, well, oh, I'm so silly. Now my lot size is a 10. So that's a significant jump, not as significant as we want, but granted, we're in a pretty big move this morning. So that's why the significance is not there to really drive this point home. But when you're managing with a higher stop loss and your stop loss is farther away, it's also helping control one thing. And that one thing is your lot size, which if lot sizes, so to me, 2 things that people are messing up. Number 1 is their management. Number 2 is their lot size. Having your stop loss further away means you have to have a smaller lot size. If you're following any set of sensible rules, you have to have a smaller lot size because your stop loss is farther away. So for me, that was one way to really rein that in, Mike. So maybe the tight stop loss is great at 10%, but if the tight stop loss is 10%, let's try buy. Buying on this pair on this time frame is a 4 standard lot size. Buying, let's try this. Of course, I can't get a good example today. Oh, stinking figure. I promise it's the anomaly. But anyways, it's a significant difference based off of how you're managing it. I promise, I promise, I promise. So
Okay.
it is.
And if you think about it, some of the early compounding sheets had it so that if you had this many dollars in your account, then you were trading this particular lot size. But how much you're going to lose is going to be dependent on how far your stop is.
I understand that. Okay.
Vince, the VPS I use is also in the link tree. I actually now have a dedicated server, but I have 1, 2, 3, 4, 5, 6, 8, 9 brokers open on this platform. Plus I have the high frequency traders through that same company as well. So I actually have 2 at this point, but granted, I'm at a different level, and I also have to have the capacity to do Zooms and stuff and what have you. So for you, I don't know how many brokers you're going to be running, but I would definitely start at their basic package. You don't need to store much. Use Dropbox to store your files and your indicators. Have 1 or 2. Make sure your computer is clean. Make sure you reset it every month or so. And that should be sufficient. If you're trying to run many, many EAs and many, many processes and store lots of stuff, I would definitely say you need more of the CPUs on it, and you need to upgrade from their smallest package. Yeah, their basic plus is enough. I mean, their basic plus was enough for me. It's just that the more I added, the more I needed. So, and most that's a me issue. And now technology is just getting out of hand, but it is out of hand. Okay, so I'm going to file, and I'm going to go to file, and I'm going to go to access, modify, ascending. For those of you guys who know from our morning classes, I wanted to, as a group, create some settings. These are not the settings, by the way. These are different, but we could use on the challenge, and they're a little bit different than my looser kind of 1 hour ATR stuff, 1 hour stop loss. They're a little tighter, so you can use them on stuff like the funded. They're tighter in an effort to make sure the gain on risk is mostly above 2 to 1, meaning at the end of a batch of 50, sure, some of them closed at 2%, some of them closed at 500%, but in general, the average is somewhere around 1.75 to 1 and 2.5 to 1, gain on risk to reward as they close, right? As closed trades. So in an effort to do that, that's what we're doing for the compounding and funded challenge. This is using risk. So you guys know we needed to update. I'll right click, indicators list. I needed to update to get the better thing. And I finally did. I was like, why is this still not working, Scott? I was running 2.1 on some of my charts, as we know. But using risk instead of using ATR, this allows me to still use my stop loss as structure, which I love. You guys know that.
Now, using our managing an R also requires you to be using structural stop loss.
Yes. So to me, I wanted, if we can control our risk and reward, right? This is all math, then we can take all the other stuff out of it. It's math. It makes sense. Like, you can't argue that. You can manipulate some numbers, but you can't argue that. So yes, simplicity does take a lot. But also clean up your logs and make sure your server is running in the same place. So let me move my box down a little. So rescan, always do that a lot. That helps me. And make sure, like, whatever server you use for your VPS, that'll work too. Anyways, back to this, using risk. This is risky. The biggest reason why is for the people who enter late and chase trades. Please don't ever try to use this ever, because your stop loss is still based off of structure. Like, so if you're using roomy kind of structure and you're trying to use risk as your management style, and that goes the same concept as the people who are chasing with pips, this is very, very dangerous. So please, 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 please hear this disclaimer. If you know you are a late enterer, don't even bother watching this. Don't even pay attention. Don't do it, because it's going to beat you up. And I don't want to be responsible for that. So otherwise, risk. I'm kind of excited, a little nervous. This is the 5-minute time frame. So everything is current with this, right? Stop loss is most significant. So this is 4. I would have it at 4 or 5, just because moments like this, I still like a pad, period. I just like to have a pad. I've experimented with 0.25 all the way up to 1. On the smaller time frames, not a big deal. On the big time frames, wow, huge deal, because then this amount is how you're figuring out the rest of this, and that becomes a huge mess. So I'm keeping this reasonably tight. Notice how at 0.75 to 1 risk to reward, I am locking in a negative 0.5. That's huge. So I'm going to go ahead. I don't want to use that perfect move. I want to use this move, I guess. So I'm going to hit escape. I'm going to zoom in. This is using the current time frame. So that's using, everything is on the 5 minutes, since we are on the 5-minute time frame. What this is doing is my stop loss is 4 fractals back plus a little bit of a pad. I like the pad. I like the pad. I like the pad because it helps with springs. And I feel like springs are the bigger banks, and they're trying to kick everyone's butt.
And so 4 fractals back. Where's my mouse? There it is. It counts 1, 2, 3, 4 fractals. Which is the lowest of those 4 fractals? That is our fractal level. And then we add the pad to that to create the stop.
There you go. I have to say actually 2 warnings. Number 1, if you're a late enter, don't use this. And number 2, if you're the kind of person who's still willing to take a big trade after a big candle, don't use this, because this is for the tighter entries. This would be good for kind of what Ricky does on his first and second entries. So his first entry is typically structure. His second is typically golden strategy, right? This would be good for something like that. But if you're late and you're coming in, you're trying to say, hey, this has moved all the way down here, and now I want to enter. This is a bad setting. These are bad, 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 very bad. They will not work. So fractals back. My trail. So a fractal trail starting at 2 times my risk. I'm saying, hey, if it comes and tries to make a lower low past 1 fractal after I hit my 2, my 2 to 1 risk to reward ratio was hit here. Then of course my trail is going to kick on, and it's going to give a little bit of a cushion, because I know how springs work. Springs just tap little areas of interest and then they continue. So I'm big on my cushions. I like my cushions, a little bit of room, right? That's what this line is here. Of course, my exit is still Johnson channel. Still love that. I didn't make a bunch of changes, as you guys can see. This is at 1.5 to 1 risk to reward. I'm saying this kicks on. You can tighten this, and you're going to find that as you tighten it, of course, it limits and or expands your profit. When I test this on 50 trades, I like this bigger number, because the smaller numbers means I'm getting knocked out here anyways, which means I have to go look for more trades, and I don't want to go look for more trades. So that's where I'm at. Plus I take really good trades. So take profit. This is where the tricky part comes in. Trying to do the math in public is hard enough. Trying to do it on paper is still also hard. Thank you, Mike, for coming. I super appreciate you. But if you're able to do this. So when you hit a 0.5 to 1 risk to reward, which means you're not even at a 1 to 1, I'm closing out a third of my trade. And the reason I've been using settings like this is so people can use a 0.03 because I want people to be able to scale out. To me, it's significant. So when you've hit a 0.5 to 1, I'm scaling out of a portion of my trade. When I hit 1.25 to 1, I'm scaling at another portion of my trade. 33% at first, 50% second, then the rest of it is just running, right? I'm leaving the rest to run. So depending on the size of your trade, if you have multiple standards open or if you have a 0.03, this will work. If you're using anything less than a 0.03, this just doesn't work. So you guys know. And that's that. So exit, I already went over. And again, 10% risk. So I love these settings when you're earlier, when you're on time, when you're taking good trades. So here's not a sell. Let's go here. Okay, so we get our trade idea. Really, we don't really get the continuation until somewhere around here. Hit exit. This continues all the way up until up here. So this is obviously a perfect move. Most of them are not this perfect. Let's just be honest. This doesn't knock us out until all the way up here. So great way to be. Is that right? That's
Yep.
where it's taking us out, I'm pretty sure. Yeah. But to kind of give you an idea. So these settings are great mathematically, but if you're not a seasoned trader or you're taking very late entries, you're taking it after some big, huge candle, these settings are going to hurt you more than help you. Stick with ATR. If you are, for the person, I think it was Wayne who asked about some settings that are closer to Ricky, this would be a loose stop loss, much looser than his, by the way, but would be a really good way to be based off of kind of what he went over in that day. So here you go. Here's another good example, just not necessarily looking at simplicity per se, but to kind of show you what this looks like and how this would work.
Yeah, and I don't think Ricky scales.
Let's look at another pair. I had to pick another pair because, yeah.
Yeah, Ricky is in. I didn't think he was in with us. So Ricky does not scale.
And then here you go. Just kind of give you guys an idea. Hey, Ricky. But that's that. Does anybody have any questions, comments on management, on this tool, on compounding or funded account challenge? I wanted to keep this shorter, way shorter than this, but you know, we're infamous for going a long time. So anybody have any questions on these topics? Because the idea is just with some basic starting points, you can cultivate even your own rules. Of course, you can also come look at the ATM on cooltradingtools.com. That was created by Scott, but you can also set a set percentage for your account. There's plenty of free calculators out there that will do the same thing. They're Google free Forex calculator. You'll find it. There are plenty.
That's
How's
the
the
second I
payout?
can do it as well.
How's the payout with the funded companies you like? With Envy, it's good. Envy is good. Bottom line, there's, what is it? There's FTMO, Envy. What other funded account platforms real quick for anybody who wants to mention some others real quick? FTMO, Envy is one of them. Surge Trader. There's so many of them popping up because right now the dollar is worth so much. So you'll notice on all of your investment platforms are like, hey, even if you keep your money in cash, we'll give you 5%, 3%. I think what is Robinhood up to 3, 4, 5%, something like that. Because right now the money is worth a lot and they're doing a lot with it. So my Forex funds was the other one I was thinking of, Ricky. Thank you. But any of those are fine. I am recommending MV because again, it keeps us all on the same platform. Funded Trading Plus, no time limit. There you go. There's a couple that you guys can look into for those of y'all who are interested. Or of course, you can stick with your broker and compound your own money based off of what rules you want to follow. But ideally, the end all for this call and my hopeful takeaway is set a percentage for your trades, set some rules for your entry, set some rules for how you'll manage based off of, I don't care if it's indicators, I don't care if it's 2 to 1, but it needs to be mathematically sound, and go duplicate that over a batch of 30, 50, 100 trades. And when you do that, you'll hopefully be able to come and compound with us and pass your funded account challenges and all that good jazz. All right, Ricky, good. I'm waiting for you. Hey, Ricky, you and me will take down MV, okay? We'll take him. Deal. Deal. You got yourself a deal. Who knows? Maybe once I'm done releasing everything, my next project, I've got a couple probably at least another 6 months, and then I'll get back into looking at building a broker. And if I do that, I want to take down like stuff like Stash and Acorns, because Acorns has taken everybody's money. And if I've got a better algorithm and broker, then we may as well do that on an app and take down those huger companies, but we'll see. Those are pie in the sky. Those are long term. So I don't know if it's worth all that effort and regulation, but it's in my head at least.
I'd like to point out one thing about ATM. It is a very, very flexible tool. And as such, when you create your rules, once you set that set of rules, it is like a different tool than if you're using a different set of rules. So you need to learn your tool and understand what you're doing. So if you're understanding that you're taking a structural stop loss, like Jenny says, and you're too far away from where that stop would be, using that tool, it's not conducive. It's like, do you pull out a sledgehammer or do you pull out a tack hammer? So you need to know what's in your toolbox.
I think that's a phenomenal takeaway point. So the best thing about this tool isn't just that it manages, is that helps you become a better trader. It's going to force
I have a question, Jenny.
Come on out, Cordrick. There you go.
Hey, Scott. Just pertaining to Scott, I was gonna ask Scott, can you make a video for us showing you how to like when you moving in profit, can you show how can you it moves straight up to break even? Because I've been trying to figure it out, but I'm gonna have a problem with it.
So you want your hold on, mute yourself real quick. I'm sorry, I muted you. You got some like bumping music in the background, but
yeah, I'm in a barber shop. I'm cutting hair, but I've just been watching y'all the whole time while I've been cutting hair.
Oh no, you're good. So you're saying when you take an entry that it protects your profit at like what at when?
Like move straight to the to the original line where you started.
So like if you, here, I'm gonna mute you again just real quick and then see if I got your question right. So if I wanted to take my entry, right, I took my entry and I want my stop loss to move straight to my profit, to my entry, basically.
Break even, yeah.
So at 1-to-1 risk to reward ratio, I can move this to set my stop loss to 0% risk. I'm moving it to break even, right? If I want to protect a little bit of my trade, I can say 0.25 based off of these settings. So now I'm slightly profitable enough to probably cover fees and what have you. Not on this pair, but show you.
The lock at means that when price hits that level, then you're going to set the stop loss to the second level.
So you can set it to break even. That's what this is.
You can say it's a negative if you want. Now, let's say you're scaling out 50% at 1R. And you set your stop loss to negative 1R. That means that if it comes down and tags at negative stop loss, then you are out at break even. Otherwise, you can continue to move in your direction. There are multiple ways to use that lock profit.
Well, does that answer your question, Cordrick?
Yeah. I just wanted to know that because I've been trying to figure that out.
Oh, there you go. There you go. Hopefully that answers your question. Yes, Jonathan, Stash and Acorns there's so many of those stupid apps are and they're getting worse too. And they have this stupid $1 fee. Yeah, it's crazy stuff. Crazy world. I haven't tested this out, but can you scale out levels to negative, effectively scaling out when the trade goes against you? Caleb, Scott?
I've never tried it. I don't remember. I think it won't let you put in a negative number for scale. Try just setting that to a negative 0.5. Yep, seems to let you, but
I don't think it's going to function properly.
I don't know that it's going to do that. I don't think it'll do what you expect. It's something I can surely look at. And it might be a feature that I can add. Something that everybody can understand too here, something everyone should understand is that this is still an active development. So it's going to continue to grow. And if you guys have ideas that I can implement that I think are worthwhile, that aren't too fringy, I'm happy to implement them.
There you go. There's a lot of things to do. But again, to drive this home, my hope and my end all goal is, yes, this tool helps you learn parts of trading you didn't know you needed to know, right? That's awesome. But my hopeful takeaway is for anybody who's using Simplicity and or trade signals or ideas, management is the key. Management is going to be what takes you from your break even or your losing trader to your, successful, profitable withdrawing trader, number one. Number two, even with or without the tool, start to really focus more on your management based off of. So yes, your entries need to be defined and duplicatable. That's a no-brainer. Your strategy is important, but it is not everything if your management is in line with that strategy with your entries. So focus more on your management, set some rules, back test them, 30, 50, 100 trades, forward trade them on paper accounts, 30, 50, 100 trades, and keep doing that. Of course, a lot size calculator is going to be awesome. Brother Barnes said, back test. This guy right here is the most punctual guy ever. I am never late to my own class, but he is always earlier than me. So always.
And as for Caleb, I was thinking about this. I know what it's going to do if you put in a negative number. So if you put in a negative number right now on a scale out, it'll scale out immediately when you put the trade on.
That's what I was thinking it would do. Because remember how we had the issues with the spread? When the spread opened up, it was just closing portions of the trade in negative.
Now, that said, I can put a filter on negative numbers in the scale out and make it so that it will act as a scale out on loss. So it's possible for me to do that.
Take some of your risk off the table.
Yeah, it would be a way of doing it. However, if you're setting your stop loss at a point, you kind of would want to consider that that is a point that you want, you're setting it there for a reason. You're trying to give the trade room to decide what to do. If you are thinking that I want to be, I don't know, I think you might find that it's not going to give you what you want. But you don't really know until I give you the back testing tools to find out.
And back testing is awesome. I second that, Brother Barnes. Okay, well, that's that. So, and let me check real quick over here. Offering. Lauren's on YouTube. Oh, hey, Mark, how are you? Lawrence offering a trade copier service. So here's the deal, Lawrence. Here's what I'm thinking. And again, I'm making no promises. I just talk a lot. I'm super open. I'm super transparent, for better and for worse, right? So if you're willing to grow along this process with me, then we can do great things. So in the next couple of weeks, or however long, I will have my own site. In that, we'll have our 2 classes a week, most weeks. And then of course, I'm thinking of taking 1 week off. And in that week, I'm either going to open up my software as a service, or I'm going to have a trade copier service. I don't know which one. And inevitably, as I continue to build that brand, I'll have other coaches and calls, hopefully some in London and what have you, but we'll see. So no promises, no guarantees, none of that stuff. Those are just some of the directions that we're looking to take this. We're all working on a bajillion different projects, from huge things and things are way beyond me. Who knows? We'll target BlackRock, and Kathy Woods is already downsizing. So she's the #1 female investor in the world, or has the most money management under her. So we've got a lot of different directions. We'll see where we take it. But if and when I ever do that, don't worry, it will be posted. You guys will know about it. I don't like the idea of signals. I don't like the idea of copy services either that are not like self-ran and self-owned, because there's so much that goes into it and there's a lot that can go wrong from server to server, from entry to entry, even on the best of them. So we'll see. No promises, but I am considering things of that nature. So that answers that question. Otherwise, I think that's it for today. So we've stayed on for quite a while. It is what, 3 hours into this? So if you have further questions, or if you're interested in the ATM, go to cooltradingtools.com. If you're going to do the compounding or funded account challenges with us, great. Please make sure that you've got your couple accounts set up and you're ready to get started in that. Whether it's your compounding, you have a few $100 accounts, all ready to go. You've checked the spreadsheets, you've cleared your schedule for that hour or so, a couple times a week. And I think that's all I've got on this. So I hope you guys all have a beautiful and happy weekend. Please continue to track those trades from this morning. Beautiful. Man, we said that spring was coming. We said too. Hold on. Beautiful. We'll see. So I hope you guys all have a great and awesome, happy weekend. Take care. Vince, yes, this will be posted. We're probably not going to edit it much because that's just a lot of time, but we'll maybe put a thumbnail on it and post it in all the groups and all that good stuff. So it will be posted and will be recorded for all the people. Thank you, Felicia. All right. I hope you guys have a beautiful weekend. Take care and God bless.